Hello there, welcome. Another video of learning for you. Last video I talked about a very important concept called moving average. I hope you have seen that video and I hope you have learned something from that video. Many people say that I should record in Hindi. Well, I think they don't know that I have already recorded a Learn to Trade series with Annapurna in Hindi. So everything what I'm going to talk now probably has been covered in that series also. Why I wanted to do in English? Because I think there is an audience in India who want to learn from me, and I feel English is a great language to teach, isn't it? So let's continue with this. Anyways, these are very small videos, and I'm going to be very slow in my teaching. So even if you don't understand English, you can read my body language. I am 100% sure. So let's focus on English. Today I'm going to talk about a very important topic which is very crucial for any kind of stock market participant. And the topic is the language of price. जिसको हिंदी में कहते हैं भाव की भाषा. What is this language of price? When we as a market participant, when we look at a stock price, we always try to read that language. And stock price is actually communicating something to you, right? Have you seen the heartbeat? Have you ever seen the screen where the heartbeat is there? Let me just show you that. Okay, let me just show you that. Let's go to this. Heartbeat, something like, yeah, you have seen that, like this. What is this? This is the language of heart, right? And there are machines which are trying to read something out of this language, which gives them an indication that whether my heart is functioning right or wrong. Stock market price is pretty much like that. It's like if you are able to understand the language of price, if you are able to communicate with the price, with the language which the price wants to communicate with you, you're sorted. Okay? To bring that concept clear in your mind, let me introduce a very simple concept, the Dow Theory Concept, which was introduced by gentleman Mr. Dow many years ago, and it's a concept which is relevant all the time. Okay, what he said that if a stock has to go up, it will go up. Okay, but there will be interim up and down in that journey, right? This is a big movement, and there are medium term smaller movements, and there could be more smaller movements inside those medium movements, right? Pretty much this graph symbolizes the language of price. Just like your heartbeat, like this, symbolizes the language of heart. This graph symbolizes the language of price. Now let me explain you this in detail, that what am I trying to communicate with you. The bhav ki bhasha is a very simple concept of trying to understand what the price is giving you an indication. Whether the price is giving me an indication that, hey, I'm going up, or the price is giving me an indication, hey, I'm going down, right? And the indication comes. Trust me, the indication comes. It looks very random and very funny to you that, hey, what is he talking? How can price suggest anything to me? But if you closely observe it for many months, many years, there will be an indication from that price. Because who is creating that price? Have you ever gone to that level of understanding? That who is creating these prices? Ultimately, price is created because of the law of demand. The price is an equilibrium point between demand and supply, right? When there is more demand, price goes up. When there is more supply, price goes down. This is the basic concept of economics which works fantastically in stock market. So when we are trying to communicate with the price, we are trying to communicate with people who are demanding and people who are supplying. And their behavior is getting reflected into the price. I hope this is clear. Now, when someone joins me in my organization, in my trading desk, we have a lot of traders who trade for us. First thing what we do is ask them to just log in into the trading terminal, which is the terminal of the broker. In this case, we are our own broker. We run a proprietary trading firm. There is a bid and ask happening in a stock. There is a buyer and there is a seller. And there is a movement happening like this. Right? It's like a dance, right? It's a movement happening. When someone joins our firm, that person is supposed to see only price movement of couple of stocks for months. For months, not for hours or weeks, for months. Like imagine if you are here with me and I tell you, these are the 5 stocks which you need to see from morning 9:15 to 3:30, and you are supposed to see it for 6 months. What will happen to you? You'll be very frustrated. You'll be so irritated that what is this happening in my life? For 6 months, I'm just looking at those 5 stocks. The reason why we ask them to do is, you have to learn how price is communicating an action with its consumer. I hope you are getting this point. If you are looking at only 5 stocks for so many months, your mind will start reading that stock like nothing else. It will be like every time when the stock will be ready for the next big move, your mind will know about it because the stock will give that indication. I'm sure this discussion which we are having, you have not seen such kind of a discussion anywhere. Because typically when we talk about price movement, price action, we always try to get into the technical analysis, graph and etc. But trust me, the price is not just about graph. Graph is a representation, it's just a graphical presentation of the price action. But price is 20.1 buyer and 20.4 seller. This is the price. And the more we look at this price on a constant basis, the better we are able to comprehend what is going on inside this price. So this is one thing I want to park in your mind, and I hope I have registered this in your mind. Now, when you are looking at a price, your objective of looking at a price is also very different. Correct? If you are a short-term trader, like let's try to write it down. What are the things you can do with the price? But let me just reduce the let me reduce this. Yeah, that's better. Yeah. So you could be a scalper. What is scalping? What is a scalper? Someone who trades for very small time frame. 2 minutes, 3 minutes, cut, 5 minutes, 10 minutes. That's scalping. You enter and exit fast. Okay. You could be an intraday trader. Intraday is you buy today, but your intention is to sell today. You sell today and your intention is to buy today. So you are squaring up your trade at the end of the day. You are not willing to take your position beyond a single day. All right. You could be a swing trader. Swing trader is someone who takes position for a shorter swing, medium swing or longer swing. Shorter swing is 2 days to 20 days. So in this swing trader, you could be short swing, you could be medium swing, you could be long swing. Short swing is typically 2 days to 20 days, medium swing would be 20 days to 60 days, and long swing would be 60 days and beyond. Are you with me? You're getting everything? Good. Then, beyond that, you could be a momentum investor. That means you want to keep position for 3 months, 4 months, 5 months and beyond. You are an investor. Your mentality is not trading. Your mentality is more of investing and a little bit of trading. And finally, you are a long-term value and growth investor. All right. There, you don't buy a stock price, you buy a business. Your relationship with the company is with the business of the company, not with the stock price, right? Now, suppose this is the broadly classifications of your way of participating in the market. So, when you are scalping, your judgment of the price will be for a couple of minutes. So, you will probably look at 3-minute, 4-minute price action. The parameters of looking at price action for 3 and 4 minutes is very different here. The moment you look at momentum investing, your parameters of price action will change significantly. Okay? If you are doing intraday trading, your price action will be judged in a very separate manner. You will not wait, or you will not try to guess what will happen in the price in coming 5 minutes or 10 minutes. You will say that, okay, if I enter at this price, today possibly the stock can reach at this price, and if it doesn't reach at this price, I will square up my trade, or if it reaches this price, I will book my loss. So there is a constraint of both price action and time, because you are trading against the time also. You have limited time because it's an intraday trade, so you'll square up anyways if the time is not in your favor. Swing trading, I'm okay to carry my position for a couple of days. So my judgment of the price will change significantly depending upon what is my objective. Yeah, I hope this is clear. I've gone very slow in explaining this, but I hope this is 100% clear for all of you. Now, why am I teaching you all these things? Because ultimately, price action is dependent upon eventually how you want to participate. Let me show you something very interesting. In StockEdge, we have something called price scans. And I want to use this feature to explain you the whole concept of price action. There are various categories of price scans. Previous day breakout scan, weekly breakout scan, monthly breakout scan, 52-week breakout scan, 52-week range scan, 2-year breakout scan, 5-year breakout scan, all-time high breakout scan, 1-year behavioral scan, 2-day behavioral scan, 3-day behavioral scan. What are you trying to get here? What are we trying to see here is which category will give me stocks where there is relevance of that category as per my participation. So if I'm a short-term swing trader, I will look at previous day breakout scan. I will look at stocks which are closing above previous high, because these are the stocks, if they are going above previous high, there is a possibility that they may continue to go up. Ultimately, it's a possibility, it's a probability. Stock market is not a certainty. We all are playing with a probability. Some people are good in estimating the probability. Some people are poor. Maybe they are good in guesswork, but when it comes to estimating the probability, probably they are wrong. Okay. So, if I have to identify stocks where there is chance that the stock may continue to go up in a short term, then I will look at short-term parameters. But if I am looking at slightly longer position, maybe momentum investing, which is for 5 months, 6 months, etc., I'll probably look at stocks which are giving 52-week high. Okay, for example, let's go to a stock called 52 breakout scan, and let's go to close entering 52-week high zone or stock crossing 52-week high. So these are the stocks probably I will be more interested in, because if a stock is crossing 52-week high, there is a reason for that stock to go up. Now let me club both the concepts together with this, the moving average and the price action, both together. So just take an example of Kotak Mahindra Bank. Okay. Now just an example, it's not a recommendation. I'm using it to teach you. The stock may go down also, the stock may go up, I don't know. Okay. Now this stock has crossed 52-week high. Great price action for momentum investors. Okay. Is the stock trading above its 200 moving average? Yep, lovely. Is the stock trading above its, let's introduce that 50-day moving average which we talked about that day. Is the stock trading above its 50-day moving average? Yes. Is 50-day moving average trading above 200 moving average? Yes, superb. Am I comfortable buying this stock? Answer is yes. But when do I buy? Risk and reward. That is the concept which has to be understood, that am I taking too much risk by buying the stock at 2170? Isn't it that I should wait for this stock to come down a bit, at least near its 50-day moving average? Because every time when the stock has come down near its 52 moving average, it makes sense for me to enter the stock. This is called breakout buying. This is called retracement buying. But you are buying when the stock is coming down with an assumption that the stock will recover from its below levels again, right? So good stock. The best time to buy was here. Probably this was the time when the stock was first started to make 52-week high. We missed it. The stock went up. No problem. Let's find out stock which has just crossed 52-week high. Is there any stock which has just crossed 52-week high? Let's see. Okay. No, we don't know. Let's see. Close entering 52-week high zone. Now, what is this entering 52-week high zone? It's basically 52-week high and 15% range of that 52-week high. So if suppose 52-week high is 100 and the stock is trading between 85 and 100, it's a strong stock. Okay. So let's see stocks which are within 52-week high zone. So these are the stocks which are within 52-week high zone and it is almost at a 52-week high. Okay. Let's go down. Let's see. Can we go absolutely down and see the stock which is right at the 15% of 52-week high, right there? Or we have Karur Vysya Bank. Okay, let's go inside this. Again, not a recommendation, just giving you an indication. So this is 50-day moving average. This is 200-day moving average, which is the prices. Let's zoom in. All right. So 210 is the 200-day moving average. 212 is the 50-day moving average. And the closing price is 211. That means the stock is almost near its conjunction of moving average. So if the sector supports, it's important that the sector also supports a stock. If the sector supports because of its price action near its 52-week high zone, because of its price action and support from moving average, there is a probability that the stock can go up. It's a probability. Again, I'm repeating that thing. It is not a certainty. How do you deal with this kind of a situation? Do you trade? You could trade, but with a stop loss. But the moment we are saying trading, it has to be supported by a stop loss. So we may enter here, but we should have a strict stop loss. Could be one candle below this entry candle, the low of that candle. So 206 could be a stop loss if we want to enter here, because you never know, stock can go in the reverse direction. You may not trust the operator. Anything can go wrong, and we need to be better prepared if things go wrong. Even a car has a airbag. If things go wrong, you are protected. Similarly, a stop loss for a trader is like an airbag for a car. So just giving you hint, just giving you an understanding. Now let's go to more short term. Let's go to short term. Say we were here to identify based on say 2-day behavior scan stocks which are opened at low for 2 days. If any stock which is opening at low for 2 days, that means the stock is possibly going up, because every time it opens, there's a low being made. Okay, let's see. Let's go to the stock called Bombay Burma. Opened at low for last 2 days, but trading below its moving averages. Will I try to make an attempt in this stock? No, I will not try to make an attempt in this stock. So what I'm essentially trying to teach you is that if you are a trader, then eventually you create your own framework by combining multiple attributes into your framework. Like I've added moving average and price action in that framework. Maybe in a couple of more sessions, we'll learn more such attributes. And finally, we will, after rejections and selections, we will build our own framework, which religiously we will use to trade in market. This is all about trading. We'll definitely learn about investing also, but today's video, I just wanted to focus only on price action and show you the power of understanding the language of price. And there are many parameters like the ones which we have already defined inside StockEdge. There are many parameters which actually helps you to decode this language of price. I hope you like the video. I'm sure you like the video and you're going to share this with your friends and family, because I'm trying to do something magical. I remember I did this, learn to trade many years ago, and I thought I should do it again. So that's why this series, I'm sure you will love it and share with your younger ones particularly, and the guys who have just started their journey of learning. Thank you so much for watching this video. Jai Hind.